Hello, everybody. Welcome once again to our live show. Today's topic is how to invest like an expert. We're now in the third month of the year and almost at the end of the first quarter of the year. And I hope we are achieving our dreams and we are all fired up to achieve even greater dreams as we go along in the year. As we go along in the year. We encourage you to share and the video to your friends. And if you have any questions, you can type in the comment section, or if you have any comment that is relevant to what we are discussing this afternoon, you can also type in the comment section, and I will address the questions. Themba quoted last time, and he said the financial system is designed in such a way that the poor pay more than the rich. If you want to live a cheaper life, become rich. And Warren Buffett also said, I will tell you how to become rich. Close the doors, be fearful when others are greedy, and be greedy when others are fearful. In pursuit of our dreams, I hope we are also investing and in ourselves, in knowledge, and also investing as in our assets and resources, as we have been being coached on this program. Themba, are there any news this week for our listeners?
Well, I won't take much time, Tefadzo. There are three things that I would want to talk about. The first thing that I would want to talk about is that in this week, I came across a report on the CNN website. And the report was actually titled Millennials Tend to Become the Richest Generation in History after a 90 trillion wealth transfer. The essence of this report is that they are making an observation that the number of ultra wealthy people is actually increasing. So if they look at the generations, they are actually projecting that the millenniums, these young people, AMA 2000, will actually become the richest, generation in history. They're basically looking at the opportunities that are available to make wealth, Tafadzwa. And, just to quote the writer of this particular report, his name is Pickett, Mr. Pickett. He says that the diversity of opportunity to create wealth is actually growing. So he quotes, for example, he quotes a number of YouTubers. We have become millionaires, overnight. Years ago, if you look at the baby boomer generation, if you look at the generations before the millenniums, they didn't have such opportunities. He is basically saying first generational wealth creation is on the rise. And there is quite a number of entrepreneurial routes to create wealth. He then goes on to quote a number of statistics. So he says, for example, the number of ultra high net worth individuals, and the ultra high wealth, high net worth individuals are people with more than, 30 million US dollars in wealth. That number has increased by 4.3% in 2023. He then looks at it globally. So in North America, the number of ultra wealthy people has grown by 7.2%. In the Middle East, it's grown by 6.2%. Even in Africa, the number of ultra wealthy people is also growing. It's grown by 3.8%. It's only in Latin America where the population of ultra wealth individuals has actually declined. I don't know why that is the case, but in 2023, the number of ultra wealthy individuals declined by 3.6%. percent. He then looks ahead and he says the number of supremely wealthy people is expected to increase by 28% over the next 5 years. And I find that very, very interesting. And he says more growth in ultra high net worth individuals is expected in the Middle East, in countries such as India, China, Malaysia, and Indonesia. I guess the most important thing here for our listeners and our viewers is that we are living in a time where wealth is being created. I don't know what your outlook of the world is, but there are people who are making it, out there. Opportunities such as artificial intelligence, opportunities such as social media are presenting an opportunity for individuals, to really make money and to print money. The second thing that I just want to highlight is that don't expect interest rates to come down soon. We know that interest rates at the highest level, probably in South Africa, we're experiencing 15-year high interest rates. The governor of the Reserve Bank in South Africa was quoted in Brazil, in Sao Paulo, Brazil, as saying that they will only decrease rates when inflation is under control. So he was quite resolute, despite pressure from people. We all know that South Africa will be having an election in May. So there's been calls from different quarters for interest rates to come down. But he says, look, rates are where they are because they are concerned about inflation. So that just reinforces the view that we've been communicating, that these high interest rates that you're seeing will be high, for for quite some time, because he doesn't believe that the task of taming inflation is yet done. And he says until we've tamed inflation, there will be no change in the monetary, stance. The third thing that I would want to say, I was looking at economic growth rates of countries. India seems to be growing at a very high rate. In previous years, we were talking about China, and China has been the darling of the world. But in the last 3 months, India's economic growth accelerated to more than 8%. I think they grew their GDP by something like 8.4%. So there is quite a lot that is happening in the East. And even in the East of Africa as well, we've experienced high growth rates. So, Tafadzo, I think those are the 3 messages that I wanted to communicate. Don't expect interest rates to come down, soon. The number of ultra wealthy individuals is actually growing and projected to grow. And, just make sure that you take your share of the wealth that is going to be created in the future.
Thank you for that insightful information. This is the time to work on your investments and growing your investments, as being said. So let's do it. Let's grow together. Moving on, would you have any books you wish to recommend in this week?
Tafadzo, we're encouraging our listeners and our viewers to be readers. So every week we recommend a book. I'm a reader myself. And if there is anything that is, that will cause us not to progress in life, it's actually ignorance more than anything else. So reading books is an opportunity to enlighten ourselves. I'm recommending 2 books on investment, Tafadzwa, in this week. The first book was written by Benjamin Graham. It's a book titled The Intelligent Investor. Today we're talking about the expert investor. But in the 1920s, 30s, Benjamin Graham published his first edition of this book called The Intelligent Investor. Tafadzo, you would know this. Benjamin Graham was Warren Buffett's mentor. So he produced this report on, value investing after the stock market crashes, the stock market crash that happened in the 1920s. And if I were to quote one of the things that he says in his book, I will give you one other quote that he has. But there's a quote that I had, from this book, which I would want to talk about Tafadzwa. He says the intelligent investor is a realist who sells to the optimists and buys from the pessimists. That's what he says. The intelligent investor is a realist who sells to the optimists and buys from the pessimist. And that informs our thought for the day, Tafadzo. But Warren Buffett has called this book, it's by far the best book on investing ever written. I must just point out two things about this book, Tafadzo. Number one, this book is about stock market investing. And our recommendation, particularly for people that want to start learning about investing, is that just learn to invest on the stock market first. In my view, the stock market is the best place to learn investing. So in case there are people who are listening to us and they are wondering, Themba, how do I take the first steps to become an expert investor or an intelligent investor? Just separate an amount of money on a monthly basis and start by buying shares. That's the first thing. That it doesn't have to be a large amount of money. Benjamin Graham was what they call a value investor. Sometimes in the world of stock marketing investing, Tafadzo, we talk about value investing. Value investing is where the investor is just trying to identify solid companies that are trading at a price which is lower than their intrinsic value. So the intrinsic value is basically the true price of a share. So what value investors try to do is to calculate the real value of a share and try to spot those companies that are trading at a price lower than the actual value. Obviously, the value investors are very patient people, which is one of the characteristics, Tafadzo, of what we are calling an expert investor. Patience is a very good thing in investing. Investing is not for impatient people. Investing is not for the speculators, for people that want to time the market. Investing is, all books that you read about investing will point out the fact that for you to be a successful investor, you need to be consistent. You need to manage your emotion. You don't need to be greedy. You don't need to be fearful, because the emotions of fear and greed are the emotions that affect investors most of the time. So if you can control your emotions, of greed and fear, you are likely to be a very, very successful investor, particularly on, the stock market. In the world of stock marketing investing, people also talk about growth investing. Growth investing is where people try to identify companies that are growing at a faster rate than the market, and then they invest in those shares, obviously with the hope that the price will go up over time. So I like this intelligent investor because this book was written after learning what caused the stock markets to crash. But if there is anything that I would want to leave our listeners and our viewers, is a quote from Benjamin Graham. He was a professor, Tafadzo. This guy was a professor in finance. In fact, Warren Buffett met him, were in university. But one of the things that he says is that the best way to measure your investing success is not by whether you are beating the market, but by whether you have put in place a financial plan and a behavioral discipline that is likely to get you where you want to go, right? So that's very, very important. So don't worry about beating the market. What he is talking about there is that you must have a financial plan as an investor. So one of the things that we want to say, Tafadzwa, and to communicate to our listeners and our viewers is that the thing that precedes investing is a plan. So don't think of, I want to invest in cryptocurrencies, I want to invest in shares, I want to invest in properties. Those are just avenues of achieving your financial plan. The first thing that you must do is to craft your financial plan. In your financial plan, you're going to articulate your appetite, you're going to articulate your goals, you're going to articulate the time horizon that you would want to grow your wealth, over. So according to Benjamin Graham, put the financial plan in place first. Have an investment philosophy that informs how you're going to, invest. And then after that, you must have a behavioral discipline. So it's not the investors that have got money that profit from the markets. It's about discipline in the market. It's about how you control these emotions of greed and um, and fear. The second book that I would want to recommend, Tafadzwa, this is a book that has not been published as yet, but people are pre-ordering this book. So this book was written by Tony Roberts. Tony Robbins. Tony Robbins is a motivational speaker. He's a coach. He has coached more than 50 million people in 100 countries. He is said to be the world's #1, coach and business strategist. So in this book, which has been written, but it's not yet out, he basically teams up with, Christopher Zook. This Christopher Zook is a renowned financial investor who's got more than 30 years in investing. From what I have seen about this book, and I've pre-ordered this book, Tafadzwa, they are mainly making an observation that the world of investing has changed. So if you think about it, Tafadzwa, what Benjamin Graham is talking about is the world as it was in the 1920s, 30s, thereabout. And some people would also want to think of Warren Buffett as belonging to the old, world of investing. So what these two are trying to do is to talk about how wealth will be created in the future. So they are making an observation that, look, individuals, these ultra high net worth individuals that we have been talking about, they are making returns with what are called alternative investments. So the observation that they are making is that the wealth of the future is not going to be created on the stock market, because the people that have created wealth in the years that have gone by have created that wealth on the stock market. But they are basically making an observation that the wealth is going to be created in the future in what are called alternative investments. So possibly, Tafadzo, let's have a show on alternative investments, one of these days, so that we can highlight to our audience where the money will be made. But they are basically talking about, the energy sector, for example. As we would know, we are going through an energy transition, at the moment. So there's a renewable energy revolution. Some people are watching renewable energy revolution taking place. They're not realizing that, look, hundreds of, billions of dollars are being printed. Last week, we spoke about this solar company that is doing very well because they have noticed an opportunity to make money. That's the renewable energy, revolution that we're talking about. So in the book, they talk about how the renewable energy revolution will create new winners and will also create winners as well. They talk about private real estate and how private real estate will work as an inflation hedge, going forward. And so what this book is all about is that the market is changing and conventional wisdom no longer applies. So they are basically saying, are you ready to play in the field where things are changing? So the book is titled The Holy Grail of Investing. The world's greatest investors reveal their ultimate strategies for financial freedom. So it's a good book to pre-order and have a look at. But our thought for the day, Tafadzo, is the time of maximum pessimism is the best time to buy, or is the best time to invest. What is the best time to invest? The best time to invest is when people are fearful. I can tell you there are people out there who've got money, but because of the pessimism in the world, they are fearful. They think that the world is falling apart. Let me just tell you something, Tafadzo. The world is not falling apart. The world is moving on. Yes, there are wars, there are rumors of wars, there is bad news all over. But the best time to invest is when people are at their lowest emotionally, right? That's when investors move in and they buy, they invest. And then they say the time of maximum optimism is the best time to sell. So again, here they are talking about greedy people. When, there are people who want to invest when the cycle is going up and people are euphoric about opportunities. And um, and what this thought of the day is basically saying is that when people are euphoric, that's the best time to sell. Because sometimes, and this is one of the wisdom that we would want to pass on to our viewers and our listeners. The world moves in cycles. Economies move in cycles. We go through periods of recession. We go through periods of economic boom. Even if we are going through a time of maximum pessimism, we are going through a depression, a recession, bad times do not last forever. The good times are going to come. And so investors and expert investors understand cycles. Not only is an expert investor a disciplined individual who has mastered their emotion, but an expert investor is also somebody who understands that this world goes through times of plenty and times of drought. And both in times of plenty, you can make money. In times of drought, you can make money. So this wisdom comes from the Bible, Tafazo. You will know about the 7 years of plenty and the 7 years of drought, and how the country of Egypt ended up being the source of wealth creation. Even people were prepared to sell their land for food. So there is a time to save, and then there is a time to sell. And when do you save? You save when people think that good times are going to last. Good times don't last forever. Neither does it happen that bad times will last forever. So that's what we would want to to say. But investing, Tafazo, is for the long haul. And one of the things that distinguishes investing from speculation is that investors have got a very long time horizon. Let me just stop there, Tafazo.
A few weeks ago, I learned to be frugal. So I was thinking, I hope you pre-ordered the book manually, not on Kindle, because then as someone who wants to be frugal, if it's manual, then I'll be able to read the one which you pre-ordered. Today we're talking about investing like an expert. Explain to us, what is investing like an expert?
So Tafazo, we've already started talking about investing, like an expert, and I've given you, some of the things that defines, an expert. So just to go over the things that we have said so far, expert investors are people who have mastered their emotions, particularly the emotion of, greed, the emotion of fear. You are an amateur investor when you invest in an investment and then you hear that prices are falling and then you start selling your shares. And then you hear that, people are buying this thing and then you start, investors, expert investors are always, they always move contrary to the wisdom of the head. In other words, people in the investment world behave like a head of cattle. They tend to move in in a certain direction. But if you are a contrarian, you will most likely, make money. So it's about spotting opportunities. It's about being disciplined. That's what expert investing, is all about. But let's just define what investing is all about, Tafazo, before we go, any further, because we need to educate our listeners and our viewers what investing is. Investing is committing money on a regular basis. That's the first thing. Don't call yourself an investor if you are in, if you don't do this as a matter of habit. Investors live and breathe investing 24 hours a day. So I know that you are an expert investor if you are prepared to commit money, regularly. And our advice is that on a monthly basis, separate at least 10% of your income towards investing. So investors commit money, they commit time. Investors, real investors, study the markets. They look out and scout out for opportunities, Tafazo. One of my best role models in the world of investing is Warren Buffett. Warren Buffett spends most of his time studying annual reports of companies that he would want to invest in. So investing is committing money, it's committing time, it's also committing energy for a future benefit. So investors always want to benefit and they always want to beat inflation. So that's what investing is all about. Investing is committing money, committing time, committing energy for a future benefit. Don't call yourself an expert investor if you've got redundant knowledge in your head. One of the things that we're encouraging people to do is to read. Today, I gave you two books. One, which is talking about the old world of investing. The other one, which is talking about alternative investments and where the money will be made, going forward. So don't be stuck in the past. Investors always try to educate themselves, and they do so for a future benefit. Expert investors, Tafadzwa, have mastered this concept of delayed gratification. If you see somebody who makes money or who's got an income and all they want is to spend, they are not an investor. An investor wants to invest in something that will grow in value over time so that they can live off the investment. And let's talk about the power of being an investor, Tafadzwa. The power of being an investor is that when you invest money, you can then have a situation where your money will work for you instead of working for money. Many people who are not investors work for money instead of having money work for them. Money is not something that we should idolize. On this show, we don't advise people to idolize money. We don't, advise people to have an unhealthy love for money. Money is a slave. Think of money as a slave, and you can make that slave work while least you rest. But the only way you can make that slave to work while least you rest is when you master the art of investing. Otherwise, you will live like an employee. Employees are people who trade time for money. So they've not really mastered, the game of wealth creation. They actually trade, time for money, and their income is limited by how hard, they work. But investors, their income is not limited by how hard they work. Their income is unlimited because their money is working hard, for them. Still defining what it is, to invest like an expert, we need to distinguish, Tafadzwa, between savings and investing. Many people think that when they save money in a bank account, they are investing. No, you are not an expert investor if you are saving money in a bank account. The reason for that is that there are three enemies of investing. The enemy number one, which is inflation. Inflation erodes the purchasing power of money. So savers don't ultimately become rich in life because of inflation. Whilst they are saving their money in the bank, inflation is busy eroding the purchasing value of the money. It's good to save. It's good to having a savings culture. It's the starting point of being an investor. But savings will not make you rich. When we talk about savings, normally when you save, you've got an objective that you have. You are saving to buy a car. You are saving to have a wedding. But the objective there is not to beat inflation. The greatest enemy of investing is inflation, right? So investors always monitor inflation and they always want to beat inflation. Investors have got a long-term plan of beating, inflation, and that's what distinguishes savings from investing. The ultimate objective of investing is to create wealth over time, and having money, work for you, over time and beat inflation. Tafadzwa, I need to distinguish between, I've distinguished between investments and savings. In talking about, an expert investor, we also need to distinguish between investment and speculation. The world is full of speculating, Tafadzwa, speculators. Speculators are people who want to make a quick buck, and those people end up losing money, because they speculate. They want to time the markets. They want to make money over a very short time horizon. So one of the things that distinguishes speculation from investment is that speculators have a very short time horizon. These are people who want to get rich quickly, whereas investors have got a very long time horizon. And here is the thing, Tafadzo. Speculators tend to be high risk takers, and that's why they end up losing their money. Investment is a sure thing. One of the rules of investing is that you never lose your capital. So investment is not for people who necessarily have got a high risk appetite. Investment is for people that want to grow their money over time and eventually pass on that money to the next generation. So investors sometimes tend to be cautious and aggressive, while speculators are, cautious and conservative. I wanted to say conservative. So investors are conservative. They have got a moderate risk appetite, and they are creating wealth over the long term. And the way that they create wealth is that they base their investments on fundamental and basic factors. So they study the investment. Investors tend to research quite a lot because they are looking out for opportunities, undervalued stocks, undervalued properties. It takes quite a lot of time to unearth these opportunities. Whereas speculators just speculate on news, speculate on what they've heard, and sometimes these are people who want to be, to have access to inside information. That's speculation. There are people who have made money through speculating. I will admit, but what I see is that over the long term, sometimes they do not preserve that wealth. One of these days, I will tell you about a guy called, Jesse Livermore, whom I studied a long time ago. He was one of the stock traders who speculated. He made lots of money at one point in his life, and then he lost it all. With investment, you don't lose money. In fact, remember what I told you. Rule number one of investing is preserve your capital. So just to summarize, Tafadzo, what is expert investing? Expert investing is when you have mastered your emotions, when you would want to create wealth over the long term, you are conservative and cautious in terms of your investment attitude. You spend time researching, about your investments. You are contrarian most of the time in terms of your thinking. You are guided by a financial plan. You are guided by an investment philosophy. It's not a guessing game where you're trying to make money and to make a quick buck. That's not expert investing. Expert investors tend to beat indices, market indices over, the long term. Expert investors look at long-term trends because the world is always changing. So these are people who see the future from far off and make investments today to benefit from the trends that are emerging. That's how I would summarize in expert investing, Tafadzo.
Thank you for that comprehensive definition. You spoke about Warren Buffett, that is spends most of the time studying the financials of different companies. If someone doesn't understand financials, can they be an expert investor? Then the second question is, when do you differentiate being patient and being foolish? Because I was looking at my portfolio, and I was thinking to myself, where do I make a decision, maybe to look for another share? When I just look at the portfolio and it's red, it's red, it's red. When do you make that decision to move on, or you just wait? And if you believe in a share, you continue buying the shares until such a time when it's green.
All right, let me answer your question, your first question, by telling you a story, true story. There was a bus driver who used to do shifts. So in the morning, when people are going to work, obviously he would be busy, carrying people to work. And then in the evening, people are coming from work, he would also be busy. But in between the shifts, he would find time. And what he used to do was to just educate himself on stocks. And he started, the discipline of investing in certain stocks, small amounts of money. We're not talking about big amounts of money. The reason why I'm sharing this story is, and giving you the example of a bus driver, is to convince you, Tafadzo, that investing is not for educated people. Investing is not for people with lots of money. It's not for the Warren Buffetts of this world. This bus driver, by the time he died, he was worth close to 10 million US dollars because his stocks had gone up in value. So the reason why I'm telling you this story, Tafadzo, is for you to understand that you do not necessarily need to be an economist to be an expert investor. You do not necessarily need to be an accountant to be an expert investor. In fact, some of the economists and accountants are not even expert investors. You just need to commit money, time, and energy to mastering investment for a future benefit. So your question was, do I need to understand financials? The answer is no. You just need to understand the basics of investing, which we try to articulate on this show, Tafadzo. If you are starting off, Tafadzo, there is no harm. In fact, it's advisable to get a mentor. When you choose your mentor, choose somebody who has got successful investment portfolio. So in case you are feeling overwhelmed, you want to be an expert investor, advice number one is read books. So I gave you 2 books that you can read. Number 2, find a mentor, somebody who can teach you the ropes and mentor you over time. Find a financial coach. That's what expert investors do. By the way, I told you about Warren Buffett. Warren Buffett is the most successful investor in the whole world. He was actually coached by Benjamin Graham. So the philosophy that he applies in his investment is what he learned from Professor Benjamin Graham. He was, that was his coach, right? So what I see is that the greatest investors, are people who have been coached over time. Financials, let's demystify financial statements, Tafadzo. Financial statements are numbers that tell a particular story. Yes, they've been put up by accountants, but they are basically numbers that tell a particular story. And anyone who is willing to learn through mentorship, if you struggle with the numbers, obviously you will learn over time. There is no harm outsourcing investment to an expert. So get into the habit of paying for financial advice. Get a financial expert to help you through your journey. Over time, as you interact with these experts, you're going to learn, investing. So that answers your first question. Your second question was, if I hold on to losing shares, am I being foolish? Yes, you could be foolish, Tafazo. To me, it's about understanding cycles and understanding, long-term trends. I've got an investment philosophy, Tafazo. It's an adaptation of what Warren Buffett believes in. I've studied Warren Buffett, but I also recognize that possibly Warren Buffett, lived in a different industrial revolution than where I am living now. We are living in a world where we've got alternative assets such as cryptocurrencies, where we've got alternative. Warren Buffett was very good at, stocks. But if you look at stocks, Tafadzwa, it's an asset class that is not generating much wealth at the moment. In fact, very little wealth will be created in the future from the stock market. Very little wealth will be created in the future from properties. Property prices have been, stagnant for quite some time. There was a time in history where people created wealth from the stock market. But going forward, we are seeing alternative investments, cryptocurrencies. I've told you about YouTube. YouTube was not an opportunity that was there. If you look at people like Mr. Beast, these are young people who have become multimillionaires from putting a lot of content on YouTube, something that we never used to have in the past. So we're living in a world of great opportunity, there. So to go back to your question, yes, it could be foolishness. It depends on the long-term trends that you are monitoring, because expert investors monitor trends. There are companies that are dying, Tafazo. I would not invest in a paper company, for example. I would not invest because those are industries that are dying. I would not invest in, if I invest in a coal company, probably it's for speculative reason, but there are industries that are being phased out and that are dying. So monitor trends. My own philosophy, as far as the stock market is concerned, is I've got a certain allocation of investments that I put on the stock market. That allocation has been going down over time, and I'm doing, I'm increasing my allocation of alternative investments, which we'll talk about, over time. I hope that answers your question, Tafaz.
Thank you very much. I will do more research. I would want to be a wise investor. You recommended some books to read. If you were to summarize what the greatest investment you have taught, what would you say are some of the insights on investing like an expert?
So let's just summarize some of those insights. Number one, be very patient and think long term. The expert investors always are patient people that think long term. Don't be a short termist, somebody who thinks short term. Number two, disregard market focus and disregard conventional wisdom. Some of the people that are actually called financial experts don't know what they are talking about. They are just regurgitating conventional wisdom. Some of them have been sent by companies who would want to make a quick buck out of you. So disregard conventional wisdom. Base your investment plan on your research and on what people who have really made money. In fact, if I would give people a criteria for choosing a mentor, choose somebody who has really made money, not somebody who has got qualifications in investment and they don't have a track record, to think about. Don't try to be a speculator. Don't try to time the markets. Don't buy into this get rich quick, schemes. There are people who have lost quite a lot of money, and somebody has been telling them, if you invest in this, you will double your money overnight. Those are scams, if I were to put it very, very plainly. Stay the course. Markets fluctuate. Stay the course. The world moves in cycles. There are years of plenty. There are years of drought. The idea there is to stay the course. In each season, as an investor, you need to do the right thing. Markets do go through periods where they are overpriced, and sometimes there are bubbles in asset prices. So a market correction is an opportunity. When markets correct themselves, it's an opportunity to make a move and to invest. So it's not as if some of these asset prices will continue going up. But more importantly, Tafadzo, markets are changing. And that's the observation that Tony Robbins makes in his book. Markets are changing. Alternative investments are coming. These are investment classes that we had never seen before. Private equity, for example. A lot of money is going to be made in private equity, and so forth. So a private credit, lots of money going to be made in private credit. I've spoken about the world of renewables. So all of these things are coming up, and it's something that we would need to look at. So that's the conventional wisdom that we learn from the gurus. Before I hand over to you, Tafadzo, let me just tell you some of the things that the gurus have said. Shelby Davis, one of the well-known investors, he says, invest for the long haul. Don't get too greedy. Don't get too scared. Again, it's about mastering the emotions of greed and fear. Charlie Munger, this guy who died was the partner to Warren Buffett. He says waiting, he's talking about being patient. Waiting helps you as an investor, and a lot of people just can't stand to wait. If you didn't get the deferred gratification genie, you've got to work very hard to overcome that. What he's basically saying is that you must, operate with delayed, gratification. Then Warren Buffett says the stock market is a device to transfer money from the impatient to the patient. I like that. Warren Buffett also says, I make no attempt to forecast the market. My efforts are devoted to finding undervalued securities. Remember what I told you? Warren Buffett, spends his time looking for companies that are undervalued. He is the one who perfected the art of value investing, because that's what value investing is all about. I can go on and give you what experts are talking about, but it's basically they are discouraging timing the market. They are discouraging listening to market commentators. They are discouraging speculation. For example, Peter Lynch who was one of the founders, who managed the Lynch Fund, he says far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. So people that try to time the markets and to speculate, to me, it's about fundamentals. It's about understanding long-term trends, Tafats.
Thank you about that. When you say a person must look for someone who is rich or with good money, like these days, how do you identify that someone is real money? There's also an issue of, like if you go on Facebook, you are not sure whether they have the real money or they're people who are just putting up maybe a face on Facebook, but in reality, they actually don't have the money. I've got a friend whom recommended a share at some point. That share really worked for them as a family. They made money, millions. But when they recommended, I think it had already, the share price had already gone up. That when I looked at the share price, it was something that was way beyond my budget. The investments, is it like even when you're looking for someone to maybe where's got the money, as you said, isn't it like maybe the investment route depends on also depends on people? Like my friend recommended a particular share, which worked for them, but for me it would not work. How then do you identify maybe someone with the money and who is investing in something that will work for you?
So the long and short of it, Tafadzo, is that don't take investment advice from a friend, from a pastor, from you can take advice from from people on other things, but I wouldn't take investment advice from a neighbor, even if it's worked for them. The reason for that is very, very simple. Number one, don't invest in something that you don't understand, even if somebody recommends it to you. That's why people have fallen for scams. The reason to recruit people into a scam is to just have a neighbor tell them how much money they have made from this scam, and then you just fall for it. You never actually do your research in terms of how is the money made, who are the people behind it, is it consistent with long-term trends? So the first thing is don't take investment advice from neighbors or from people that are just talking and they are not. Remember what I said to you today. An investor is somebody who is willing to put in time, put in money, and to commit energy. Those people that are like that, who eventually become mentors, people that you can see. You can see this person lives and breathes investment. They can tell you the latest investment that they have made. They can tell you the latest mistakes that they have made in investing, and they have got a track record, if they are going to be transparent with you. So advice number one, don't take advice from your neighbor. Advice number two, do your own research. Do your own due diligence. If you are starting off as an investor, invest in investments that are accredited. Invest on the stock market. Don't invest in scams, on the basis of advice if you are not yet an expert investor, because expertise is developed over time. The most important thing that we're trying to communicate to people is start investing, because you start as an amateur and then you will grow to be an expert over time. But it's time in the market that matters more than trying to time the market, because you are going to learn. Investing is like riding a bicycle. You're going to fall, and then with the mistakes that you make, you learn, and then you become better at it over time. That's what makes expert, investors. But they also come through mentorship. By the way, Benjamin Graham, the guy that we are talking about, he lost money, in the stock crash in the 1920s. So he then wrote a book. He went on to manage a portfolio. That book is basically summarizing the mistakes that he has made and what then constitutes an intelligent investor more than a foolish investor. Read books about investing. That's one of the things that we are trying to advise, to people. Don't just go with the guy who is putting a lot of content on Facebook. Some of them do not have a track record. You don't even know how they made their money. I wouldn't take a mentor, I wouldn't take mentorship from somebody whom I don't know how they have made money. There are people on Facebook, they flaunt their wealth. They talk about how rich they are, but they cannot tell us, what method they use to make money. They cannot tell us what investment they did. All they are telling us is how much money, they are making, Tafadzo. I wanted to tell you a story, but we don't have time. We only have got 4 minutes left of this. Maybe we can take the conversation to next week, Tafadzo. But I wanted to tell a particular story about, and probably I'll tell that story next week.
Thank you for that. Do not take investment advice from a friend. People make mistakes when investing. Would you share some of the mistakes?
I've shared some of these mistakes. The first mistake is not having a plan when you are investing. All right. So people operate without a plan, not doing your own research, right? Being emotionally attached to investments. So remember the emotions that you must master. Investment is not an emotional thing. There are other areas where you can display emotion, especially when it comes to love, but not when it comes to investments. Sometimes the share price is not performing very well. Exit the relationship. You are not married to that stock. It's not your partner. So don't be emotional about investments. That's the thing. Some people do not have a unique investment philosophy. You must develop your unique investment philosophy arising from your plan. That philosophy basically articulates what system you've got for selecting investments and for exiting investments. I've been privileged, Tafadzo, to be in the investment world for a long time, and I've developed a system, especially on the stock market. So, for example, I don't hold shares for more than 6 months. I go for undervalued shares when they, the market price corrects, I exit. And I've been successful from that. But also, Tafadzwa, you must live and breathe investing. Live and breathe investing. Always accumulate knowledge. It's very, very important. Monitor the long-term trends. The people with money are moving their money to where the wealth will be created in the future. So it's always good to tap into the knowledge of those people that seem to be at the forefront of knowledge. I think that's all I can say for now, Tafadzo.
If someone wants to start on the journey of being an expert investor, where can they start?
The stock market is the best place to start, right? So start by, if you earn 100 rands every month, start by separating at least 10% to invest on the stock market. So when you invest on the stock market, when you start, don't worry about concepts of value investing, growth investing. Just invest in a share that you love, probably something that you consume on a daily basis, which is consistent with long-term trends. Look on the stock market, look at where we are in the economy. Try to choose a share that is likely to go up in value based on the understanding that you have of trends. That's the starting point. And as you invest and as you study, listen to business news. So the other thing, Tafadzo, that I would want to recommend to people who are starting, the next time you get a newspaper, don't read about the gossip that is taking place in town. Go to the business section. You might not be familiar with the terms, but that's a good starting point. When you listen to news, some of the news that is there is very depressing. What's the point of knowing that there's been a shootout in Braamfontein, for example? It's better to know business news, because those are the kinds of news that are going to impact on your ability to create wealth. So I'm quite deliberate, Tafadzwa, in the news that I feed on. I don't feed on negativity. So for somebody who is starting, don't feed on negativity. Try to separate yourself from the head, because remember, when it comes to investing, people move like a head of cows. Go to investment seminars. Listen to people that know what they are talking about with regard to investment, and try out some of their investments. So the stock market is a very good starting point, and then you learn from them. Once you have started making a little bit of money on the stock market, then go to the alternative investments. Some of these alternative investments are not necessarily accredited investments, but at least you have grown to know yourself, you have grown to understand your appetite during that time. And then you can, once you have grown your capital, you can then do and invest in things that you are passionate about. It's always good to align your passions with your investments. So because remember what we said, invest in things that you understand, and things that you understand tend typically to be things that you are passionate about in life. So that would be my advice for somebody who is starting off as an investor. Don't start with the big amounts. Even with some of these, stock market trading platforms, you can start very small with small amounts of money, 100 rands. The idea there is to be disciplined over time, Tafaz.
Thank you very much, Themba, for the insightful session. What are your concluding remarks, and where can people find you if they want to connect?
Number one, we are living in a time where great wealth is being created. It's not my words, it's what the CNN report was actually talking about. People are creating money. So that's the one thing that I would want to just communicate to our audience. Number two, it's possible to be an expert investor. You don't need special training. You just need to have a passion for investing. Why should we develop a passion for investing? It's because the investors are able to truly make money their slave and to enjoy the benefits over time. Don't live off your hard work. If you are working very hard, know that that money that you are working hard for is supposed to be invested, so that ultimately you can live off the passive income that flows out of the sweat of your labor. Otherwise, you will forever be in this rat race. So investing is an opportunity for you to escape the rat race. But like we have said today, Tafadzo, it takes mastering your emotions to be an expert investor. It takes quite a lot of time, energy, and money to be an investor. It takes quite a lot of discipline. You have to know thyself. You have to be disciplined. You have to be mentored to be an investor. There is no harm working with experts. If you are clueless about finances, go and get a financial planner, an expert who can explain and break down complex concepts to you, so that you start out on this journey of investing. Above all, Tafadzo, we did try to communicate today that markets are changing. People made money from the stock markets in years gone by. But now it's about alternative investments. It's about taking advantage of the revolutions that are taking place. We gave an example of the renewable energy revolution. Lots of wealth is going to be created. In previous discussions, we spoke about the artificial intelligence revolution. Lots of wealth are going to be created. In fact, in our generation, Tafadzo, we are probably going to see the first trillionaire in our generation. And those trillions that are going to be created are not going to be second generation, third generation. It's all going to be first generation wealth. That is the time of great opportunity that we are living in, Tafaz.
Thank you very much, Themba. I hope one or all of my children will be one will partake the trillionaire's blessing. Thank you very much, everyone, for joining us. We really appreciate the support and hope you learned something and you're going to start investing. If you're already an investor, I hope you improved the knowledge that you already have. Thank you so much. If you want to get a hold of us, you can write an email to tafazwa@mazibukospeaks.co.za. You can also like and subscribe to our YouTube, The Dream That Was Worth Fighting For. And you can also visit our website, www.tafazwa@mazibukospeaks.co.za. If you want to get a hold of Themba, you can connect with him on his LinkedIn, or if you write us an email, we'll connect you to him. Thank you, and thank you once again, Themba, for the support. We really appreciate. Thank you, everyone. Your dream is worth fighting for. Let's grow together. Cheers.